Looking to take your financial knowledge to the next level? You're in the right place. Welcome to Ask Ralph, offering accounting, technical, and financial advice. Whether you're looking to save taxes or improve your business, he's got you covered. Here's your host of Ask Ralph, Ralph Eastep Jr.
Hello and welcome back to the Ask Ralph Show. I'm very happy that you're joining us today. My name is Ralph Eastep Jr. I'm an accountant in Middletown, Delaware, and I do this show every week to impart some wisdom and talk about some things related to business and other things that I find interesting. Well, today we're going to talk about Refund Hype. If you've listened to the news of the last few days or the last week or so, you've been bombarded in the news about how this year's tax refunds are 8% less than usual. And I want to spend some time talking about that because if you're not aware of how the whole system works, then you might think that we're in a situation where people are actually getting smaller tax refunds. So let's talk a little bit about that today. Let's talk about how this all works. So basically, the IRS statistics are showing that when people are filing their tax returns right now for 2018, in general, the refunds being issued by the IRS are 8% less than the previous year. Well, you know what? That is a statistic that you can't argue with because it's being provided by the IRS. But here's the part that people don't understand. When you work and you work for, let's say, W-2 income, like a typical, person that goes to work, they have an employer and employee relationship. First thing you do when you start working for somebody is you fill out a W-4 form, which basically says, listen, I know I need to pay taxes, and here's what I want you to withhold from my taxes throughout the year so that by the time I get to the end of the year, I don't owe them and they don't owe me. That's the ideal situation. When I work with clients in my practice, I tell them very candidly, my goal is to get you within a couple $100s of either direction. Either you're getting a little bit of money back or you owe a little bit of money. To me, that's a very beneficial financial way of handling your taxes. But you have to remember, this is all an estimate. So when you fill out that W-4 form, you're estimating to your employer how much you want to have taxes withheld. Okay, so let's say in year 2017, you filled out that W-4 form and you put single with 2 dependents, okay? So say you're a single mom, you got 2 children at home, but you're working. Now, in 2017, you got a refund of, let's say, $3,000, okay? So along comes 2018, you do nothing to your W-4 at all. You didn't take any of the IRS advice. You didn't do any of those things. You just said, look, I've always been single too. I'm going to keep it single too, and let's see what happens. Then you come in and get your taxes done, and all of a sudden I tell you your refund is only $1,500 now. So you got $3,000 the previous year, now it's $1,500. And you look at me and say, Ralph, what's going on? I always get about $3,000 back. And I said, well, did you change your W-4? Well, no, I didn't change my W-4. I'm always been single too. So then we look at the W-2 and we say, okay, well, let's see. You made the same amount. Let's just make an assumption. You made the same amount of income year 1, year 2. So it's not the income issue. But then we look over in that box and say, how much federal tax was withheld? And we look at 2017 and we show maybe that was $6,000 withheld. And you got a $3,000 refund. Well, then we look at that same box on the W-2 in 2018 and we see that federal withholding had dropped from $6,000 to $4,000. And see, that's the part that nobody wants to talk about. Oh, of course, refunds could be down. That doesn't mean that your taxes didn't go down. It just means that instead of getting that refund at the end of the year, you've gotten that refund all along. Now, the problem with that is people have an expectation that they're going to continue to get the I never realized this until I got into my own practice, but there's a whole industry of people. It's not necessarily a bad thing, but they use that as a forced savings account. I had a client in just yesterday and said, look, we put aside our refund because that's what we use to pay for our medication. They happen to be retired people and they are in that, I think it's called the donut hole. I'm not that familiar with it, but anyway, they know they're going to have to come out of pocket, in the March and April timeframe to pay for medication. So they use that refund. Well, if you're counting on that refund and all of a sudden you come in and get your taxes done and I say to you, hey, you know what? You usually get a $5,000 refund, but this year it's only $2,000. Well, obviously, that's going to make a huge impact on your budget. Now, that being said, the intellectually honest person would have said, well, I thought it was strange. Every week I was getting a little bit more take-home pay. So when you hear people talking about, well, I got this 8% less refund, the next logical question is, well, did they get the money as they went. And so the simple question, if you find yourself in this position, is ask yourself, when you got those paychecks all throughout the year, was your direct deposit, if you're getting direct deposit, a little bit more? And you could say, well, Ralph, I didn't even notice it. It just goes into my account and it gets spent. But that's the thing you want to look at. And then look at your W-2 form and say, okay, well, did I really save taxes? Because it's true that everybody I've looked at this year who have not changed their W-4 form have generally had less withholding because the IRS built into those tax tables. And the way it works is, so you have an employer, let's say they use a payroll service to handle the payroll. So they say, okay, well, Tom worked 40 hours, Joe worked 20 hours, Sally worked this, so on and so forth. So they send that over, and then magically appears a paycheck. And on that paycheck, there's taxes withheld, there's federal taxes, there's state taxes, there's Social Security and Medicare. Well, in order to figure out how much tax to take out of this employee, now Social Security and Medicare are a percentage, so that's never going to be an issue. But federal and state withholding are based on some assumptions. Those assumptions could be such things as how many dependents you have. Well, guess what? Here's why there's a problem. So with the 2018 new tax code, there's no such thing as exemptions anymore. So if I'm a person who, let's say on my W-4 form, I have married 4 exemptions. So basically I'm saying, let's say you have a stay-at-home wife. So yourself, your wife, and your 2 kids. Well, then you go to do your tax return, and somebody like myself says, well, we can't deduct exemptions anymore. Now, that being said, they doubled the standard deduction, but here's the problem with that whole logic. So let's say you're a married filing joint couple, and they doubled your standard deduction to $24,000, okay? But let's say in the previous year, your itemized deductions were very close or over that $24,000, okay? So let's say that in 2017, they were $25,000. In 2018, they're still $25,000. Okay, great. So you're going to have a standard deduction, an itemized deduction of $25,000. But now all of a sudden, those 4 exemptions that you had times $4,000, that $16,000 deduction is gone. So yeah, great. The standard deduction was double, but that doesn't really help you. But you've lost now those 4 exemptions. So your taxable income just went up. So that's where you could actually pay more tax under the current tax system. Now, that being said, they reduced the tax rates. So those people who have more taxable income because of less deductions will be paying a lower tax rate. It just depends. I've seen people get hit either way this year. I had a retired couple in yesterday. Their tax bill actually went up by $400 because of this tax bill. But don't believe this hype about, refunds are less unless you really look at the underlying issue there, and is, did that person pay more tax? And the only way you'll know that is if you look at that W-2 form and say, hey, what was my actual tax cost? And my experience so far this year is the average person has saved about $1,800 from this tax bill. Now, and it's not political, that's just factual. So I hope this was helpful to debunk these myths of this refund reduction hype.
You've been listening to Ask Ralph, brought to you by Sazio Accounting Plus. Please subscribe to and rate our podcast on Apple Podcasts or wherever you get your podcasts, and leave us a rating and review. Our podcast is produced by Carolyn Peters. Thank you for listening, and be sure to like us on Facebook and follow us on Twitter at Ask Ralph Media. You can also hear me each week on 1450 WILM and on 1410 WDOV in Delaware and on the iHeartRadio app. Submit your questions or ideas for future shows by sending an email to AskRalph@AskRalph.com.
The information contained in this episode of Ask Ralph is based on data available as of the date of its release. Sagio Accounting Plus and Ask Ralph Media Inc. is under no obligation to update this content if changes occur. Applying this information to your specific situation requires careful consideration of all facts and circumstances, and any information provided is not to be considered as financial, tax, or legal advice. Please consult your tax advisor or attorney before acting on any material covered.